Hi guys, good afternoon and welcome to the Mumbai Newsroom. I'm Pavitra Parekh. You guys are tuned into your stocks. There are lots of queries which have come in, and today is also a good day to be discussing a lot of these because there are lots of earnings coming through as well as a lot of action in individual names. But first up, a quick look at the markets which have recovered a fair bit from the lows. We've recovered around over 60 points from the lows, but it is still a near 200 point cut that we are looking at for the Nifty. So 17,920 is where we're at right now. A bulk of the pain really coming through from the banking names. So the banking index in itself is down around 870 points, and you have the Adani group of stocks also, which is under some pressure. We'll talk more about the market action, but first up, let me invite our guests on this show. We have Kush Bohra, founder at kushbohra.com, as well as Parthiv Shah, who's the director at Tracom Stock Brokers, joining us now. Kush, Parthiv, thank you both so much for taking out the time and speaking to us today and helping our viewers with all of their queries. We have lots which have come through, so let's get straight to it. Krishna Das writes to us from Kerala. He says he has 67 shares of Infosys which he bought at 1482. He wants to know the target price at which he should book profit on this one. Parthiv, coming to you on this one, Infosys has already posted results right now as well. It's quite good. They've increased their guidance as well. And this is just considered one of those IT stocks that you can hold for the long term, right? But that said, if someone has a medium term kind of view, what is the target that you would advise on Infosys?
Good afternoon, Pavitra. See, I think definitely you rightly mentioned that their growth trajectory is looking very good. In terms of constant currency growth, I think they have been doing better than its larger peers, which is even TCS, since quite many quarters. And more importantly, I think this quarter we saw even the margins were pretty steady. The attrition is slowly and gradually coming to a steady state. And especially the management talk about the deal pipeline and talking about a lot of deal mining that they've been doing. The total contract value has been growing reasonably well, and the management's, I think, structural story for the long term is pretty upbeat, despite the fact that lot is talked about in the IT sector regarding the headwind coming from the US and the European markets and the talk of the soft landing. But in terms of client productivity budget spends, I think it seems that the going is good. So especially Infosys has corrected a lot from its peak. So I think post the correction, currently if I look at the valuations, is quoting at around 21 times. Not very expensive. It's probably more in the neutral range. So I would suggest to hold on to this stock for the longer horizon.
All right, a hold on for the longer horizon. That is pretty much the view that we always get on Infosys and, some of these larger IT players. Kush, coming to you on this one, how do you look at it? Because, like we were mentioning, it has also recovered, a fair bit from the lows that we did see last year. Do you also think that this is a good one to just hold on to for the long term?
Yeah, well, why should I fall out of consensus then, right? Definitely a hold on this one. The stock has rebounded quite a bit. The only suggestion I would have, for the gentleman here is that hold it with a TSL of, or rather a trailing stop loss of 1510. In case the stock was to drop below that, it could see a bit of a medium-term downtrend or a near-term downtrend, and he'll still be in a profit if he exits at 1510 those levels. Couple of averages converging there. That's why the level becomes critical. Otherwise, hold on to this stock. Nothing to worry about as of now. 1600, 1670 is where I would place my target 1 and target 2.
All right, got it. That is on Infosys. I feel like you guys are going to agree on the next query which has come in as well. So let me read that out. Rahat Furniturewala writes to us from Surat. He has 10 shares of Larsen & Toubro, that's L&T, bought at 1785. He wants to know at what price he should average his holdings. L&T currently is at 2174. It's pretty much at, life highs right now. But let me come to you, Kush, on this one. Your call on L&T, and is this just like Infosys one that you should hold for the long term?
Oh, absolutely. I mean, it looks like the same query repeated again. Just the name the name of the stock is different. But yes, the one-word answer is: should he average? Yes. Can he average now? That is also a yes, because the stock is off its highs, which is close to 2300. And the payoff ratio is getting better, even if someone's looking for a fresh trade. But for an average, why not? Plus, what I must congratulate the investor on is the fact that he's looking to average on the upside, which is also known as pyramiding. But this is a fabulous strategy. Once the stock is it's doing well, you add more of those. So beautiful question here. I would suggest this is a good entry point. The stock is off its high and taking support near its 20-day moving average. For a near term, I would suggest 1750 is where I would place my stop loss in case you were to make a trading bet on this. My targets would be 2400 and 2650, depending on, or rather depending on the fact that he wants to hold on to this for at least a couple of quarters, if not longer.
All right, that is on L&T. Parthiv, a stock like L&T also, ideally becomes more attractive ahead of the budget, right? Because you normally see that big infra push come through. We've also been talking overall about the government's big capex. Do you think that in that light, L&T is definitely one that you should keep, and perhaps you can add more even at these levels?
Oh, absolutely, Pavitra. See, I think even great companies like L&T did have a tough time. I recollect, I think, barring last year, I think before that, almost for the past 4 years, this company, in terms of the stock performance, did nothing because, it had some legacy project issues, especially the Hyderabad Metro Rail of road projects which was impacting the ROE. But the management has very smartly mitigated that and they have improved upon their net working capital cycle, as a result of which now quarter on quarter we are seeing this improvement. And they've been, categorically talking about hiving off a lot of non-core assets, and a lot of contribution from the L&T comes from its services business. And also we know the IT business is extremely strong and the financial services business also performed reasonably well. But now going ahead, I think it's all about infrastructure. L&T's execution track record in terms of executing large infrastructure order book, I think has been fantastic. And going ahead, even in the budget, we are expecting the budgetary allocation towards the infra space to go up. And L&T is a direct proxy, and very few companies have the capability like L&T does in terms of the execution track record. So certainly I would suggest a hold. It's a great time to hold a stock like L&T in your portfolio.
All right, great time to hold a stock like L&T. Both of our guests agree there as well. But the next query is from Prasada Rao, who writes to us from Tamil Nadu. He holds 1,250 shares of Laurus Labs, which he bought at 450. So he's definitely taking a bit of a hit there. And he also has 500 shares of Tata Coffee, which he bought at 190. He wants to know whether he should continue to hold on to these stocks or should he let go of them at this point. Parthiv, first your call on Laurus Labs. I mean, it's down 10% this month alone. It has been seeing significant cuts, even if I take a longer term horizon. But the high for this one was really above 700. Do you think it has the scope to recover that kind of ground?
See, not really in the immediate future. Very frankly speaking, I think Laurus Lab had done a fantastic job. It had a dream run, and past performance, if I were to look into multiple quarters, I think they were reporting very good set of numbers. And then all of a sudden, we started seeing some sort of price erosion and more impact towards the margins. No doubt, I think in terms of the facilities that they have, they're state of art, and the management has guided for the long term in terms of touching, billion-dollar revenue, and they have built the capabilities for that. But I think all that will take time. And again, knowing the fact that they're having a lot of issues with some of the products, and also I think in terms of the R&D pipeline that they have, it will take a little time to ramp up. So no doubt, I think we like the company, we like the management, but at current valuations also it is kind of fully priced in. So in terms of the longer term targets, I think it will take some time, but only if the investor has the appetite to hold for the next at least 3 years, I do believe that he'll get his price above the cost.
All right, that is with a 3-year view. And what about Tata Coffee? This one, I mean, he got in at quite a decent price at 190. So what do you think about Tata Coffee?
See, again, here, I think we know that this is a cyclical play from the Tata Group stable, and Tata Coffee also has an agreement to supply to the Tata Starbucks JV. It's a fantastically run company. They have fantastic acreages in terms of where they get their coffee from. And I believe that, going ahead, such companies will do well. And probably there is also a scope that Tata Coffee would eventually get amalgamated into the Tata consumer business for it. So I think that would also be value accretive for the existing shareholders.
Okay, so that is on Tata Coffee. Kush, coming to you on both of these, Laurus Labs first, and then what do you think of Tata Coffee as well?
Parthiv being the gentleman, he's put it rather euphemistically. See, Laurus Labs is a very clear exit. The only saving grace I see here is the fact that, it's gone into a severe oversold territory and might rebound. So that's the only saving grace. Perhaps 360 or 375 is where he could look to exit. But given the kind of loss he's looking, even that would not really, matter too much. If he really wants to hold on to this, with dear life, I would suggest 330 is where I would place my strict stop loss. Any fall below that would take it, further down. And any bounce, as I said, 365, 370 is where, he should look to exit. That's on Laurus Labs. As far as Tata Coffee goes, this looks like a good bet. Here too, rather the stock is now actually in a bit of a downtrend in the medium term. So I would suggest hold on to this with a trailing stop loss of 205. Even if he exits at this price, it will be, a neat profit. If the stock were to rebound from here, 225 is, where the stock could head to, on the upside.
All right, got it. That is the take on this stock. But by the way, Cipla's numbers are flashing on your screen. The revenue has come in at 500 5,800. This is versus the poll that we had of over 6,300. So there is a bit of a miss there. The EBITDA is at around 1,400. So we are getting that figure. This is versus the estimate that we had of 1,495. So perhaps a little bit below there. The margin is pretty much bang in line with what we were expecting at 24.2% for the margin for Cipla for Q3. And we were expecting 24% there as well. The profit has once again come in a little bit below what was expected. So at around 800. The stock has really fallen and it is losing more ground as we speak right now. 2.7% gone on Cipla. Once again, let me run you through the numbers. EBITDA at 1,400 crores is below what we were expecting at 1,495. That is on the EBITDA front. So there is a miss over there. There's a miss on the revenue front as well, which has come in significantly lower. Margin is in line, but other than that, I am seeing quite a miss compared to the CNBC-TV18 poll. Let me actually toss this to our guest. Parthiv, I don't know if you track this stock, but at first sight, I mean, if you heard the numbers, revenue at 5,800 is pretty much, it's quite a lot below what we were expecting of around 6,300. Your first take on these numbers from Cipla, the stock is around 3% lower right now.
Cipla, I think, certainly has some sort of miss in terms of its revenue, and more importantly, even we'll have to look into the margins because I think they have a fantastic pipeline for the respiratory space, and no doubt, I think what we do understand is that in a lot of markets, barring China, I think there was some slowdown in this respiratory portfolio, but I think it's seasonal in nature, and we'll have to understand in the management conference con call as to what they are guiding for going ahead. But certainly, I think these numbers are a miss, and we'll have to also understand what sort of revenue generation they've done from the US portfolio, because they had good acquisitions in the past over there and they were trying to ramp up that portfolio. Is there been any sort of price erosion in the US markets is something what I think the street would like to understand.
Okay, I think for Cipla, there's also lots for us to watch for in terms of how the US and India biz fares, right? So I'm waiting for those details and to see what kind of contribution US has really made. There's also a lot that we have to watch in terms of ramp up of some of their drugs. So Albuterol is one drug where we were waiting to watch what really comes through from the ramp up. It'll be interesting to hear what the management has to say. There's also, some concerns because there is a warning letter to the Goa plant. So that is something that we're waiting for comments on. But just to quickly run you through the numbers once more before we quickly wind down, it is EBITDA, which is up 14%. It's coming at 1,400 crores, but that is again below what we were expecting. Margin at 24% is the only thing which has actually pretty much come in line with expectations. Everywhere else, there seems to definitely be a little bit of a miss. Net profit at 800 crores. This is versus estimates of 944 crores. So it's 140 crores below what was expected from Cipla. The stock is tanking. The street is really not having it. Kush, any thoughts on this stock? How is it looking on the charts?
Well, Cipla and Sun Pharma were the only two stocks in the IT, or rather the pharma space that were holding fort. It's given way right now. My concern is that it slipped below its 200-day moving average, which is placed at 1035. If it doesn't really close above this today, then I'm afraid 1,980, where we have 980 is where we have a small gap. The stock could actually trickle down to those levels and fill that gap in. So 1035 is where I would keenly watch. If the stock closes above that, then there's a scope of rebound. Otherwise, we're probably headed to 980 levels.
Okay, that is a quick take on the stock. By the way, I've already told you what it's looking like versus the poll. We were also expecting like around a 12 to 15% growth versus what, we saw last year for Cipla. The revenue is perhaps just around 5 or 6% higher. So, not surprising that the street is really not having these numbers. But that is on Cipla. Let's do one thing. We'll take a quick breather on this show. But when we come back, we'll take a look at the Cipla stock, of course. But there's lots more stock queries also lined up in just a bit. Hey guys, welcome back. You're still tuned into your stocks, and like we were telling you, Cipla's numbers are flashing on your screen. This is the Q3 performance, and it looks like quite a disappointing set because there has been a miss on the profit front, on the revenue front, on the EBITDA front. Margins have come in pretty much in line with what we were expecting at 24%, but other than that, it does look like a weak showing from Cipla. In fact, we also have Ekta here to really help us make better sense of the numbers. Ekta, on first look at the numbers, this definitely looks quite weak.
Well, yes, definitely, Pavitra. It is a weak set of numbers, at least in terms of the revenue as well as the profitability. So the revenue growth is coming in single digits this time for Cipla. The expectation was around a 14% growth. Remember, for the US business, it's probably going to be a disappointment this quarter. and that's possibly one of the key things that we will be watching out for. The margins have come in at around 24%, so that's in line, but the profit growth too has been quite weak this time. We're waiting by for more details with regards to Cipla, but as of now, the revenue and the profit is a bit of a disappointment.
All right, Ekta, thanks a lot for getting us all of those, numbers on Cipla. The stock has recovered just a tad, but it's still around 2.8% in the red. So the management commentary will be really important to watch, like Ekta was still pointing out. In fact, let's now get back to our queries because we still have Kush and Parthiv with us. I'm going to try to squeeze just a few more in. We have Kamal Batra, who writes to us from Rajkot. He says he has 500 shares of IEX, which he bought at 219. He's a long-term investor, and he wants to know what he should do with these investments. Should he hold? Should he exit at current prices? IEX, by the way, is at 137, so it's, well below the price where he bought. Kush, how is this one looking on the chart?
65 levels. I know it's way off, his buying levels, but even then, 165 would be some respite. So that's the level that I would look for, 130 and 165.
All right, Parthiv, what about you? Do you think IEX is, a stock worth holding on to? Even if he has a long-term perspective, do you think it makes sense to hold on here?
If I look at the current valuations of IEX, they're quoted at around 42 price to earning multiple. And on a forward basis, if I were to look at and looking at the current growth trajectory that they're having, I think it would be somewhere around 39 times. So I think it's not at all reasonable. And I believe that it could further time correct, if not price correct, because from the peak levels, I think we had seen a lot of interest in this stock and then a lot of selling took place. And I really doubt that there could be, I think, much upside from here. Because no doubt they have almost 94% market share in the power trading exchange, and the price erosion that has taken place in terms of the volume being little volatile, I think does tend to impact a stock like IEX. So despite the fact it's a free cash flow generating stock exchange platform, but we are not very upbeat for the long term.
Okay, not upbeat for the long term on IEX. One final query before we wrap up, and this is interesting, and this definitely comes in from someone who's a new investor. Aishwarya Nair writes to us from Mumbai. She says she wants to start her investing journey, and she wants to know, how to really go about it. She's asking, is buy on dip strategy really a good way to pick stocks? She is looking at the long term, so that's not a problem, and that's perhaps good for a long-term investor. Parthiv, this is something we discuss often, that in hindsight, the best investment opportunities are what you get during a market fall, right? So even on a day like today, if you're getting a lot of these larger blue chip companies at a 3-4% cut, do you think it's good to get in at these levels?
See, Pavitra, very frankly speaking, as the viewer mentioned that they're just starting the investment journey. So it's extremely important first to understand the market setup, to understand the companies, and even if possible to go and understand the basics of fundamental analysis. If that is not very easy and easy for the reach of the investor, it's always a good idea to start the equity investment journey through a mutual fund vehicle and slowly and gradually jump into the market. But I do agree, you rightly pointed out, I think it's always best to start your investments in the stock markets with blue chip frontline names, especially companies where we know the track record has been fantastic for investors and the corporate governance standards have been very, very high. And more importantly, during such occasions when there's a market fall, these stocks also tend to correct. So on every fall, I think these stocks do tend to become attractive. But again, I would suggest a proper allocation, and more importantly, I think sectoral diversification is must.
All right, that is very helpful advice. Kush, do you agree? The best time to invest was yesterday, the next best time is today?
Absolutely, very well put. Indeed, the only just a couple of points here. First, I would like to congratulate her because most traders become investors after they make losses. So when you're starting out, getting your queries sorted is a brilliant way to start out. Second, just have a very clear demarcation between what I call the core portfolio and the extended portfolio. Core portfolio is something that you hold on for 5 to 10 years. An extended portfolio is something that's more seasonal. That's the only other contribution that I have to whatever you and Parthiv have said. That's the only thing. But kudos, starting and asking the query before you get started, brilliant.
All right, so that is some advice for our viewer as well, for all new investors who are perhaps looking to get into the market at this point. But with that, Parthiv, Kush, we're going to wind down on this edition of Your Stocks. Thank you very much once again for taking out the time and speaking to us about all of these individual queries that have come in. The market is 195 points in the red. There has been a recovery. We're not taking that away, but it's still a near 200-point cut with a lot of the pain coming through. 900 points gone on the Nifty Bank. Cipla, by the way, like we told you, posted a disappointing set of numbers. The stock is still 3% in the red. And you can see that sharp fall really came through after its earnings. So we're going to wind down on this edition of Your Stocks. But remember, you can always email us your queries. We will address them with our experts. Stay tuned. Closing bell comes up for the last hour of trade, and it promises to be interesting. This is the last hour of the expiry day.